Okay, good evening, everybody. Welcome to the weekly take on the market. Today is Thursday, June 5. It's about 6:30 my time, Pacific Standard Time. Out of town this weekend, going somewhere tomorrow. So today was the day for this video. I'll be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. The disclaimer, please take a moment to read this. This is important. It allows me to speak freely on these videos. I'm not licensed. Can't tell you what to buy, what to sell, what to hold, how many stocks you should own, what your position size should be. I could go on the disclaimer. So please take a moment, and it allows us, like I said, to speak more freely and to have a lot of freedom when it comes to webinars, IBD Live, and this video. All right, so we'll do the market indices. I'll talk about ETFs a little bit, some ETFs, and stocks to watch. I got a whole list of stocks, and then the quote of the week. So let's start with, let's see what I have here. So we'll start with sentiment. I know a lot of you like to see this each week. I'm torn on how valuable it is, but I'm going to keep posting it. So we lost the tiniest amount of bulls. We actually lost some bears. Some more people got neutral, but nothing of significance. And it's still a little surprising to me that we are so close to new highs, and after a 20% rally off the lows, that we have more bears than bulls. This is the AAII sentiment survey. So my gut instinct is the market needs to make new highs to drag people in before it could get in trouble, if it's going to get in trouble. So I'm still of that mindset that the market's headed for new highs. It's not that far away. We'll pull it up, maybe 3 or 4% in the S&P. It doesn't mean it can't pull back a little bit. We've had some distribution days. Looks like 4 on the Nasdaq, 3 on the S&P. And I think today was a distribution day on the markets. So it could pull back, which would be nice. So you could get some more setups. So, but sentiment is a little hard to gauge, but at least it seems like people are not totally bought in that this is a bull market rally or a rally that they should participate in. All right. So before I get into ETFs, let's pull up the charts of the indexes. So here's the NASDAQ, and you can see volume was higher than the previous day. Market was down more than 0.2%. And so we have a distribution day today on the NASDAQ. Not surprising with kind of the headlines, what was going on. But we're still above all the moving averages. Here's the 50-day, here's the 200-day, I think that's the 21. So, it's not exactly alarm bells on a single distribution day. It's the clustering of them. If you get a bunch of distribution days in a row, here's like, I don't know if they're all distribution days, but usually it's really the key is when you get 3 or 4 in a 7 or 8 day trading span. I think then you really want to consider alarm bells at that moment. All right, so the NASDAQ, it is what it is. Like I said, I really believe we're headed here. It's not that far away. The S&P holding up a little bit better. So what's that, 59.39. So to make new highs, that's 200 S&Ps, and that's one Fed day nowadays. 200 is not that big a deal. So the indexes are acting fine, should be in buy mode and have some exposure. A lot of it depends on style, because I like to sell on the way up. And if the market doesn't correct, I'm not going to get any setups along the way. I'll get lighter and lighter and lighter. So I don't have a lot of exposure on the growth side. I had like 3 gold stocks coming into today, and I sold 2 of them today. So that's kind of where that was like my major position, and some other stocks sprinkled in here or there, but wasn't pedal to the metal. IBD has you at 80 to 100% exposure, and I'm probably more like 65% or something like that. Except that was coming into today. I didn't even do the math. I'm probably less than half at this point because of the selling I did today, and it didn't do a whole lot of adding to names today. Let's look at China. So oh, you know what? We'll leave that for the ETFs. We'll go to the ETF section with that. So how about gold? I talked about gold. It's in this space. I think there's a chance it breaks out to the upside. It's holding up pretty well. Silver, all of a sudden, just out of nowhere, has had a big day. So it was up, what's that, about 5-6% that day, if I can get on there, 5 and change. Today, 3 and change, but at one point probably was up 5. So it's up like 10% in the last 2 of the 4 days. I don't know what that means. It's just observing that. And a lot of the best setups were in the mining stocks, which is not my favorite group, but it is what it is. If the market tells me those need to be bought, then I just buy them. Bitcoin. So Bitcoin had kind of a rough day today, and so did like Ethereum. So very interesting, but this looks like it could be setting up. I don't think I would buy this, but I probably would want to be aware if it were to break that downtrend. And let's do the same for Bitcoin. And let me turn off my camera so you guys can see just in case. So that's kind of what's going on in the market world. I have to admit, I'm over the whole tariff thing, so I don't know where we stand on that, if that's even an issue. I did hear, I think that China and Trump had some talks today, maybe over the phone, but honestly, I've just kind of moved on from that because I feel like the market has sort of moved on from that unless something drastic changes. So and maybe there's a Fed meeting coming up, but again, I just do so much better when I just focus on the individual names and what they are doing. So I found this, I think it was a tweet on Twitter of ETFs, top 15 value destroying funds over the past 10 years. And there's the SQQQ, which is the triple inverse NASDAQ. Well, of course, the NASDAQ's made an incredible move in the last 10 years, but it's the leveraging that really gets to you, that makes this really difficult. These are, I've said before, if you're going to trade leveraged ETFs, double and triples, I just don't think you can hold them for more than 3 to 7 trading days. I know I don't hold them. I don't even get to 3 days sometimes. I just don't have the heart for it. I might hold them because I think if we have a poor Friday, I might buy some. And then if the market gapped down on on Monday morning, I probably would just get out, just kind of like a little bit of a hit and run, because you can see that makes it pretty tough. UVXY, there's ARC Innovation, which is, and this is shareholder value. So these are the ones that have had a lot of money flow into them. There's KWEB, there's ARCG, a couple of bond funds. There's an ultra short S&P one, no surprise. A couple of them, pro shorts, short S&P, and then the pro shares ultra short. Brazil, and then more S&P ones, and you can see how it's littered with the inverse product, or the levered ones. So I've never heard of FTLTX. If that's an ETF or a mutual fund, but one thing I've kind of warmed to the idea of ETFs. There are so many ETFs, and they're coming out with a lot of very interesting ones that I'm exploring. I'm not sure I know exactly what they do, but it's, you get these like yield max ones and stuff like that. So let's pull up ETFs. So let's go SQQQ. You can see, like, if you go to the monthly chart, look at that. So you can't even see it. It's done so poorly. But like winter is this new one that it pays a high yield. There's the yield, 94%. Now it's based on the current run rate. If it can obviously change, but they're buying puts on MicroStrategy and then selling puts to generate income and things like that. So I've owned some of these before, and the dividends are very, very good. But if we get into a bear market, you could possibly kind of hide maybe a portion of your portfolio and stuff like this. There's Crash, which is the Tesla one. Now it's crashed as well. It's down 75%, but look, the stock's gone up. And if you took into account all the dividends, the yield's 133%. It's possible maybe you're down, 20% in this. I don't have the slightest. You're not down 75% based on all the dividends it's paid. And that's with the stock going up. If the stock were to go sideways to down, it would be a different story. So there's lots of ETFs out there to explore. And I know a couple of you sent emails about you didn't understand how to look for ETFs. Apologize. It should be really, really simple. Okay. So open up the screener here, hit new stock screen, call it what you will. ETF round 2. And these categories right here are the categories you can choose from for screening. And ETF yes or no will be in this one, general stock criteria. So you just click it to open it. See how it opened up? I go to the smart select ratings. It gives me all the IBD ones. Go to general stock criteria, ETF / closed end fund, yes or no, or strictly ETFs. If you want ETFs only, just choose yes and you're done. That's it. 4,247 ETFs down here. Now, if that's too many, you could sort or you could add more items into the screener to reduce the field. But you could also just click market cap, for example, down here in the list panel. And you see the Vanguard S&P 500 is the largest market cap ETF and go from there. There's going to be a lot of duplicate ETFs if you were to sort by market cap. So I probably would do something like percentage change year to date or percentage change current week. See, I've never heard of this one. LifeX 2050 Infinite Long, LIAQ. So I would double click that and it looks like it barely trades. Oh my gosh, hardly trades. So that's why maybe I think if I were to go back to the screener, I think last time I would add in a liquidity factor. So shares and holdings, let's just use a market cap of 1,000, or that's in millions. So 1,000 millions, 783. And then GDXJ is the largest percentage change year to date. So that's how you can find ETFs. And because they generate, the one thing about ETFs, the fees are pretty high. Keep that in mind versus like a mutual fund, and unless it's like something like an S&P, but those other ones, I would imagine the winter and the crash have high fees. They're more like, trading vehicles, so to speak. And that would be it. And so you could kind of it helps you to kind of get a feel for the market too, I think, by looking at ETFs and seeing kind of what's going on out there. All right, so let's jump to stocks to watch. And I have a list here, so I'm just going to go in order. That way I know I'll get to them all. So here's HIMS, too deep to be a base. Looks like a giant, really, really sloppy cup with handle. But tried to break out here and got stuffed. So it looks like it just needs time. This would be, a pass for me. If you own it and you want to sit through it, maybe. If you've done really well with it, love the story. Story seems very interesting to me. The earnings and sales are very strong. So it falls in the leadership bucket as far as I'm concerned. Hood, one of the examples of why sometimes when you sell them, when the going's good, they just keep on going. So it's busted through new highs, and you have a bit of a reversal bar today. So not as bad as HIM's reversal bar, but it gave back a lot of the gains today. So that looks tired, I guess. Palantir. So some of the leading stocks look tired. They don't look broken, nothing wrong with them, but they look tired. So Palantir looks tired. CoreWeave, which is the new IPO, broke out through here. Finally had this was kind of a down day, but it looks very climactic. had pretty exhaustive move. You go to the weekly, I mean, it's gone from 35 to 165 or something like that in a short period of time. So it looks, maybe it's tired, but this is it's showing leadership for sure. In the gold sector, so Orla broke out today. I like this one because, and I do own this one. This is the only gold stock I still own. Fidelity Contra Fund. Danoff took his position. I know it's not that much, but he more than doubled his position in this current quarter. That was pretty compelling to me, which is why I bought Orla. It gapped down on earnings and then started to come back. Looks like a kind of a shakeout, and I own it. I've added as well, so I probably own it at 10 and change or something. BTG was another one that Danoff has a pretty good position in as well, but it just felt like gold was pretty strong today, so I thought I would take profits into that one. And then AEM, I sold as well. Tried to get into new highs and then reversed. Nothing wrong with it, but another stock that Contra has a position in as well, has doubled his position here. So those are the kind of the gold area. A-Lab. So I had a tough day today. I had a tough day here. I think it needs some kind of handle. That would be great if it could do that. Baba, I think it's building a handle. So very interesting. I don't know what to think of the Chinese stocks, but at least it's building a handle and doing something. Duolingo, DUOL. Sure is holding up really well. I've missed this one for sure. Leading stock. CrowdStrike, you had earnings or lack thereof, or at least as far as growth. This is not that compelling to me. This would be a pass for me. But the stock didn't really do much wrong. But I don't know. It seems like it's the earnings and sales are starting to slow. So I would avoid this one. If you want exposure in this group, you had Rubrik, which announced, I think it was up a little bit after hours, then it was down a little bit after hours. I guess we'll find out tomorrow really kind of what's going on as far as the after hours. I didn't dig into like what the report meant because I don't own this stock anymore. Another one I sold too soon. But this acting much better than CrowdStrike, and Zscaler acting much better as well. So I would go to those as far as leadership in that area. Carvana, leadership. And I've got this little trend line here. To me, it's if the market gets in trouble, these stocks should come down. They should have these failed breakouts. And they're not having them. Like Duolingo, if the market would have something like that. And they're not having them. So that's kind of bullish action. Kind of helps me to at least I think the message from the market is higher prices based on, these are it's small anecdotal evidence, but you just look around and you see that a lot. VST, I guess you could have bought this as a double bottom, but it's the leader in the group. So CEG, it was kind of opaque. Is opaque the right word? If you don't know what the message is or what the news is, it's cloudy for sure as far as the deal that they signed. So stock tried to go higher and then got set back. So I would avoid that for now. But VST and TLN, they're holding up much better. Oklo in the see this, you got stuff too, a lot like HIMS. And you've got boy, this looks very much like him. So you got this giant cup with handle. It's very sloppy. It's not a proper cup with handle. Don't get me wrong as far as my knowledge of what a cup with handle should look like. It's too deep. It doesn't have any of the characteristics, but like to the naked eye, like if you're first starting out, you could easily see a cup with handle here. And so that's partly why we created that pattern, right? To help people to kind of understand the nuances of what a proper pattern is. So this, if you're in this, looks tired, needs time. It seems. CCJ in the same area, holding up much better. The ETF for that, it's just okay. It's not terrible. It's not great. I mean, it might be a little bit better than okay, but if you look at like the weekly or the monthly, it's still so far off the highs. And one thing about Oklo that bothers me, besides, I always tend to sell. I mean, I sold it that day, so it went a lot higher. But is the physical, and unfortunately, we don't have a chart of the physical, the ETF that, I don't know if it is an ETF that tracks the physical uranium. It's SRUUF on like Thinkorswim and Yahoo Finance, maybe. It's not in our database, but it never really rallied on that Trump news. The reason I know is I bought it and it didn't go anywhere. It went up the tiniest bit and then it went back down. So I think for this to be real, you need the physical would need to rally. It's kind of like gold. Gold doesn't go up. Why would the miners go up? So there's that, and then there's coin, I guess, in the Bitcoin area. There was an IPO today, Circle Internet Group. Not slightest stable coins, something like that, but day one. So maybe add it to like a watch list and see if it can go sideways for 6 months or something like that. MSTR, no position. I don't own that winter anymore, but I will go to it if this starts to break down. But this looks like a really sloppy cup with handle. There's a lot of that. And then last but not least, there's NBIS, which I do own a little bit. I did do some selling today. I just can't help myself, but I try to keep a little bit of it. And, and it's the same thing, right? Although, see how it had this really bad day and then it reversed and started to come back up. I like when they do that. I love these shakeouts. Those are my favorite. So I bought it there, and then I'll do a little bit of selling there and try to hold a little bit more. And then maybe, if I have to, I'll just buy what I sold back there for another go round. But the reason I sell is because I did it there. And if I don't sell here, I'll panic there. And then I buy it there. And if I don't sell here, I'll definitely panic there. And then I bought it here. And if I don't sell there, I'll panic there. And you can see how, I'm taking like, I don't want to say crumbs because the way this stock moves, and I am along the way being wrong trying this. It doesn't work every time, but I feel like I've taken like 10, 12, 14% from this stock in a number of occasions. And the reality is, without doing that, like unless I bought this base, but even that one, you would have gotten stopped out of. So without doing that, every time, if you don't do that, stopped. And who knows, maybe not stop this time, but I could see where it would get frustrating. And here's a stock that's gone from 20 to 50, and you've got four losses along the way. And that's where I hear a lot of people say, like, the market's doing so well, and they're like, I'm not having a good year. I've got nothing but losses. And I'm obviously not digging into the why of it, but I think this is the why. Situations like this, where if you're going to buy stuff like this, I think you need to be more proactive. Now, if it's Nvidia, like if you buy Nvidia here, you don't have to do that. You think Nvidia is just going to go for another leg, another cycle? That's different. It's Nvidia. I don't see anything wrong with that. Like I was trying to look at Cisco. Like I almost bought Nvidia last few days, but like look at, if I go to, and this can be the lesson. Hopefully this video isn't too long. I apologize, but you guys can always turn it off. You get a money back guarantee on the video if it's too long. You send me an email. I'll be sure to refund the price you paid for this video. Um, all right, so Cisco, like I was thinking, like okay, here's what I was thinking, like Cisco. Okay, so Cisco, 1995. So I don't remember when it was, but if it was, I feel like it was here. But a friend of mine who had started trading before me was buying Cisco. He had different style, but he was like lamenting his buy in Cisco because he was buying it because they were saying how Cisco was slowing and blah blah blah, and he was just like, he knew the story inside out. He's like, this is crazy. This is a buy here, and I remember him telling me that story about it, like in '95 or '96, how he had bought down there, but just didn't have the patience to hold it. So I'm not sure what good that was, but anyways, but so this is, let's go to the weekly. So you've got this really big base here, tries to go up and it undercuts, right? And so that's the key, right? Undercuts, and it goes from 40 down to 20. So it corrects 50%, which is a lot more than what Cisco did. I'm sorry, what Nvidia has done so far. But you see how it corrected 40%, and it made a huge move. It'd gone from 4 to 40, it'd gone up tenfold. So you could see where people would think, okay, maybe the move is over, especially if they felt like the earnings were slowing or something. But then it righted itself, builds this huge base, and then just grinds higher. So it breaks out finally out of all of this around $20, and it runs to 40. So I don't know. I mean, why can't Nvidia do the same thing from here? I don't want to pretend. I mean, like, to me, if I look at the monthly chart of Nvidia, it makes my hair stand up. But I'd have thought the same thing here and here and here and here. So why can't, I mean, there's no reason that can't have another leg. Absolutely no reason. Is it going to? I don't know. I haven't the slightest. But I want to be open to the idea that it could have another leg. It's such a quality company. The earnings, sales, and the cash flows, everything is so strong that you can have size in that, and you can hold it with some conviction and not have to worry about waking up one day with the stock in half, like with NBIS or QBTS, the quantum one. I mean, sometimes I have some sleepless nights when I'm in these stocks, when I'm trying to be really Oklo, when I'm trying to be really heavy for what I see as like a boom, boom, boom type runway for a day or two or five. And, NVIDIA don't have to worry about that. So that part, I mean, look, it could open down 10, 15, 20% for sure if something, you had really bad news, but, that would be highly unusual, not impossible, but highly unusual. So I was thinking about Nvidia, after the earnings, so maybe it was here or something like that. But anyways, that's on my radar as a possibility, and the base is what, 43% right there. Wow, that's more than I thought. I didn't realize it went down 43%. So what did Cisco go down? I forgot. Let's go back. Apologize. Pretty certain it was very close. Well, there's no base here. 40.75 down to 18.75, so more than 50, right? 54% to be precise, but kind of in the same same ball game. So I might find my way into Nvidia. I think we'll see, but I'm open and flexible to the idea of that, because if the Nasdaq's going to make a new high, and if it makes a new high and stays there and holds, and then I would think, I don't know if you're going to make a double off Nvidia here, but I don't see any reason why you can't make 20, 25, 30, 35%. And you could do that with size. At least I could, because I can have 30% position or something, because of the quality and the sponsorship of the company. All right. I think that's it for stocks to watch. And I sprinkled in a little lesson in there. So let's jump to the quote of the week. It's very short. Okay. Scott Farron, he wrote the book called Dead Companies Walking, I believe. I have his book here somewhere. I can never find him when I want him. He's a money manager, but it was his book was. I guess you could use it to look for short sales, but also he kind of a way to look for things to avoid as well. But the key, his quote, the key is flexibility. I try not to have a rigid view of things. One thing I find is a lot of these great money managers and these Wall Street veterans, they all kind of say the same thing in different ways. Bill would often say a lot about, flexibility, always, open, flexible. Drove the guys, the portfolio managers nuts, allegedly, because he'd be bullish one day, bearish the next, bullish the next, neutral the next. And it's because he was getting information and he needed to, change his view. So I think you have to be very, very flexible and open to anything that happen. The market could go make a new high and run 50%. We could go into a bear market and it could go down 50% and everything in between. So like and the reason I like this one, I don't think I showed Tesla today, but the action in Tesla is like so crazy, and it seems like maybe the tide has turned the other way. For the longest time, I was very bullish on Tesla. Let me pull up the chart. I'm sorry, I was very bearish on Tesla. I misspoke. And then it just didn't want to go down, right? This looks like a buy. And I know a lot of you probably were buying it, and this looks like potential buy. But today's action, I know it was news induced, and so we'll have to see, but it's a pretty bad day. Look at the volume up 100%. So I've kind of changed and I did short Tesla today. I shorted it today when it just started to break. And it's not a big position. I covered a lot of it at the close because my fear is tomorrow it could be up 10 or 20 just because the whole thing blows over. And it's hard to know, but it's possible that if something is really, really wrong, if there's a sea change, this could just waterfall and go down a lot. And so I want to risk a little to make a lot. So I'm very flexible to what the market's telling me most of the time. Sometimes I get, set in my ways and I have an idea and it takes me a day or two or three to kind of say, Scott, why are you being so stubborn in this name, both long and short, both good and bad. But it's very difficult for the market to get me more than a day or two or three. I usually will blow let the market will topple my sandcastle eventually with the right amount of pressure because I just don't like losses. An account goes down one day and it goes down the next day. I mean, I'm just not going to sit there and let it go down for 27 days in a row or 25 or 30 days, but not in the same names, that's for sure. So I don't know what to make of Tesla. Like I said, this is obviously not a very good day, and I think it's possible. I don't know how likely. It's probably unlikely, but not impossible that this could go down a lot. This could waterfall down, but we'll have to wait and see. I have a small short position, and I think like a small short will make a lot if I'm right. If this is going to go down, it's going to go down a lot. So I don't need to have a big position to make a lot. And if I'm wrong, it'll start to go back up through 300, and that's probably where anywhere near 300, I'll say uncle. So I'll risk, at this moment, I'll risk 16 points for the chance to make 100 points. What, if you look at a monthly chart of Tesla, it's gone a long way. If I look at a weekly chart, why couldn't it go down to something like that? And I'm just, there's a magic crayon here drawing things, but that would be 80 points. So I'm risking 16 to make 80. It's a pretty good risk reward ratio. So bottom line is, just cannot get set in your ways. I've seen some people come and go in the markets, and they usually go because they've been forced out. And it's 98% of the time, it's because they They just cannot get off the wrong side, whether it's you're on the wrong side of a short or the wrong side of a long or the wrong side of the market. I've seen that before. Or too big a position. I've seen that before. A guy I knew had really large position in a single stock and just allowed it to really tear his whole account apart. So stay flexible. All right. Well, everyone have a great weekend, and I'll be back next Friday, I believe, and we'll see you then. 800-831-2525, market surge at investors.com. Thank you, everyone. Bye-bye.